Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, December 22nd, 2017. So a little bit different format. I'll see if this format will work better. If not, we can go back to the original format. A little bit more brief, I think, this video. Also, so anyways, we'll look at stocks such as ETFs. We'll look at some of my recent trades and in these names here for solar, gap, etc. Big deal, I think, about the high yield bonds. We'll look at them. And then pretty much same as always, we'll look at dollar, gold, oil, and natural gas in the video. All right, so first thing first, if you made some money this year, then donate some to the charity of your choice. I think it's a good thing to do. Merry Christmas, and soon we'll have a new year, but I'll still have a video before that, hopefully before the New Year's. So this video will be a little bit differently formatted than normally, but let's see if this works. If it doesn't, make a comment in the comment section below, say that you like it or you don't like it. Okay, S&P 500 ETF SPY. This was the last good buying opportunity back in August, and we basically continuously moved to fresh highs since then. Now, I'm not sure exactly how to explain it. I'm just getting a little bit of a feeling of that we're really far up here, and we haven't really even come down to this green line, for example. By the way, these indicators are available at MasterChartsTrading.com, and you could get them for TradingView interface for now with your membership. So here we have good, basically, support levels, and here's a support level to watch for S&P. S&P 500 ETF SPY, which will be 260.92. If we look at futures, I can tell you exactly what to look for. So same thing, you can see that this green line has been moving steadily higher, so a good support level will be at 2619.25. Notice here the price didn't even come down to that in August, so you would have been better off buying S&P ETF SPY. But there were some opportunities if you did futures in April. Overall, it's a great year for stocks, I think. So again, do donate some money if you made some money in the stock market. Now, what I'll get to junk bonds, but overall, I think it's a very good market, very strong market. My concerns are that it's kind of I guess I hate the word, but it's a bit overbought and really is in need of a pullback. Well, here's QQQ. It just keeps running higher and higher and higher. Here again, a good opportunity to buy would have been back in June, July. For IWM, my subscribers, those that have the indicators, I share this indicator with my subscribers, so it's really simple. But I do send alerts out about this ETFs as well. So, for example, he would have been in August. A great opportunity to buy for IWM, another one here in November, and even here recently. We had some decent touches here of the green line around December, in early December. Depending on your, where you want to put your target, then you could have made already some money. For beginners, I recommend wider stops and smaller positions. Why? Because psychologically, it's just easier, not to have that many losses continuously. Like, for example, my recent success rate, I just did my I just did my tally for the year basically, and it's been pretty good success rate. 74% of transactions ended positive. Profit factor is almost 2.6, so it's pretty good. And I still have transactions open, so I can't really count those, but overall it's an encouraging sign that the transaction success rate is quite high. So hopefully the subscribers are doing same thing and they're getting a high success rate as well. Now let's look at some of my recent trades so that I can explain why I did them. Here's First Solar, and it's pretty straightforward. So there are two ways basically that I trade the markets, and number one, and of late has been my more favorite method, and this is just buying the breakout. And I just put, for example, for First Solar, here's that breakout that occurred on the 12th of July. And sometimes it just works great. You just buy it on breakout, it just goes in your favor immediately. Now I didn't enter there, I waited for the price to come down to the green line. Here I bought First Solar at 47.44. It kind of traded sideways. Then I actually set a limit sell, and I forgot about it, and it got executed. But then this stock continued higher. So in any case, I have fully profitable position. It's up, even though I have only half of the original. It's still up almost 52%. Pretty nice. Okay, next one I wanted to share today is gap. I think it's an educational trade. Again, here is that breakout, the original breakout, and you can just buy it on breakout, and it went in your favor. I decided to buy it a little bit on a pullback to the green line, so I got it at 29.13 here on the 9th of October. Notice it went against me, so I set out and just waited for the market to sort itself out. The reason being is because when I calculated my position, I put my stop relatively wide, relatively far away from price action. And to me, this works fine. I don't care if it's a smaller position. I have a very high success rate. So I have a lot of small positions. It doesn't matter. I'm still making money. So here on this trade, I bought at 29. It went against me initially. I set it out because my stop was way down below here and my position was small enough to accommodate a fluctuation of this magnitude. And then it just shot out higher, and I sold half here on the 1st of December, I believe. And then looks like gap is continuing higher, so I'm trailing the rest of this position. So again, my personal thing is I like to have wider stops. This way the market won't shake you out as easily. Okay, next one I did is Twitter. Still have it open. So here is Twitter, and here is that breakout I referred to. And you can just buy the breakout on the 13th of October. Put your stop like there, maybe below the recent lows, but significantly below them. Wait out this little correction, and boom, it went in your favor. I went ahead and I entered on the 5th of December at 20.62, and it immediately went in my favor. And I kind of like those kind of transactions when they just go immediately in your favor. My position was up as much as 23%, but I already sold half and I moved the stop to entry. See, what I usually do is I sell half of my position at a predetermined target, usually a few ATRs. ATR, also known as average true range, and you can, well, if you're a trader, you should know this number for your stock, because this is how much the stock on average fluctuates. So I usually set my first target, depending on how volatile the stock is. Like for example, Twitter, I wasn't really 100% about it, so I set a relatively tight target, but for other stocks that I'm thinking about keeping for longer, I may set a wider target. But for Twitter, I set a relatively tight target, and when I had sold half here, and I'm trailing the rest above my entry, so I can't lose money, and this is what keeps me sleeping at night. Another trade I did just now, Nike. This one I didn't really mess around. I actually just bought the breakout, except for I bought it a few days later because I think I was not monitoring the stock, and then I was like, oh, look at this, this is beautiful. And then I just went ahead and I opened November 15th at 56 bucks, 56.77. It just immediately went in my favor again, and I like this gap, especially when it gaps in your favor. It's a very good sign. Sold half here on the 4th of December, and I'm still trailing the rest. And actually, today's action is quite bullish, I think. And finally, here is another stock I wanted to show. I don't normally trade these guys that much because they're so volatile, but sometimes it's kind of interesting. So here is my position. This is a really volatile small cap MYOK, myocardia. So I went ahead and I entered here on the 8th of December at 38.60. Again, relatively tight target. I only want to get one average true range out of this. And then I move my stop to entry and I, relax basically. It went in my favor on the 20th here, and then today, actually today I sold half, so I should put it in. I already sold half and moved my stop to entry. So, sometimes it's quite simple to trade. Because I'm getting quite a bit of students are asking me, and they're asking the same questions over and over, and rather they're having the similar problems over and over. One of the bigger problems is, of course, with discipline is how can you continuously implement consistent trading system, and it's not easy. I'm not gonna lie to you. Yeah, sometimes I break my own rules, and that probably confuses the heck out of the subscribers. So I do apologize for that. But we do make money, which is important. I think the important thing in this business is to just avoid losses, or at the very least, avoid large losses. So with my system, you buy at one of the lines. Once you get a target, you move your stop to entry immediately, and then you write the rest. You can sell half as well. So, overall, it's really a successful system. Like I said, I'm getting pretty good results, and some of the recent subscribers also recently posted a chart. Gosh, and I forgot to mention it. So I will look for that chart when I get to the currencies. Okay, let's move on to bonds. First, let's look at junk bonds. Here's high yield junk bonds on a weekly time frame. Now, again, these indicators are available at MasterChartsTrading.com, and I'm using them as a setting of 52 weeks because this is a weekly indicator. This is a weekly chart, rather. So, what I see here is a close below this red support line. So we had some instances in the past of when this occurred. We had a unraveling sort of the markets. So for example, here's it's not 100% foolproof indicator, obviously, but here's a really good example. Here in 2014, we did not have a close below the red line. It bounced, and then finally here in September of 2014, we had a close below this red line. Notice that we had big moves down and very large spikes of prices, but notice that they were rejected, and they stayed below this breakout blue line and then continued lower. And again, notice that this indicator caught a very nice move here, for example, and you shorted junk bonds, for example, if you wanted to short them in 2015, in February 2015, and it just went in your favor very nicely. So am I predicting something of that magnitude? I have no idea. Nobody really knows. But I am taking a little bit of a precautionary measures. I started myself cutting exposure to the junk bonds. I had some about 20% of my retirement portfolio was in a junk bond. I decided to cut that exposure to about 5%, and I raised cash from that. So again, this may or may not mean anything, but here's junk bonds J and K. A little bit better chart. I like this candlestick a little more. This is a weekly candlestick, so there's a lot of activity here, and it's full week. Next week will be already partial week. So overall, you know, could be that we are beginning to see prices roll over for junk bonds. Now, junk bonds and stocks correlate highly to one another, and this is important because when junk bonds move lower, the stocks also have a tendency of moving lower. So let me find junk bonds correlation to stocks. Notice that correlation is relatively high. You know, of late it's been negative, but this is the daily time frame. But if we look on weekly time frame, we can see a clear, strong correlation between junk bonds and stocks. So I wonder again if junk bonds have rolled over. If they have rolled over, then stocks may be next. I mean, stocks are at all-time highs, so for the stocks to drop, here is S&P 500 ETF SPY. So let's just pretend for a second that S&P decides to drop, I don't know, to, let's say, the blue line from the current levels. Well, it's already a little bit down, so that's oh, sorry, using the wrong indicator, using the wrong tool. I meant price range. Yeah. So if we drop to the blue line, which is normal correction, it's not even a correction. It's like it's a 6% move. So that's not even beginning of anything remotely resembling a bear market. That's a 6% move. That's significant. Especially if you have very high exposure level to stocks. If we would drop to this red line, that's a 10% move. It could be a heck of a buying opportunity if we get there, but this drop will be painful for many people. So if it even occurs, it may or may not occur. It's been, you know, with the junk bonds behaving the way they are, the way they've been doing, I'm a little concerned, honestly. So here's again junk bonds, and this close below the support line may or may not mean that we'll see further follow through to the downside. Yeah, so let's move on to the investment grade. Here's TLT. So notice how interesting sometimes it goes exactly to this blue line. Again, these indicators are available at MasterChartsTrading.com. Look how it nicely touched that blue line 1, 2, 3 times. This is a weekly chart, by the way. And this week we closed above this blue line. So I think TLT is bullish. I personally have a position in TLT. Let me show you my position. Here's TLT. I went ahead. Actually, I had 2 positions. This one that I opened on the 1st of December, I closed at the profit. Here, um, um, here on the December 14th, I went ahead and I entered at 127, and it immediately went against me. So that's not a good sign, obviously. But you know, my position size is always proportional to my comfortable loss levels. So even if I have a little bit, a small loss, that means that, it's just a part of the system. It's a part of the game to have losses. Again, as of late, I've been having pretty good success rate. About 74% of my transactions ended up in the plus. So here what I see is I still see a close above the blue line. And this is a support line. I think we could see a breakout higher from here for TLT, especially if stocks decide to move lower. And they could easily, like I just said, stocks could easily move down 10% without anything even remotely resembling a bear market. Alright, let's move on to the Forex universe. Again, I'll be using the indicators. These are custom indicators, but I can share them with you on TradingView.com. And just look for me at MasterCharts. And you can do also MasterChartsTrading.com and sign up there. So, for example, here is DXY on a daily time frame. So here we have I think it's a bearish security, bearish instrument. The reason why I think it's bearish is because of this initial breakdown back on, you see when this is, the 22nd of May, and since from here on I would be looking to short it basically at one of the lines, and here would have been just a beautiful shorting opportunity if you were able to get in right there, the red line, and then there's a couple more. Look, made a new low, bounced slightly, and just continued lower. So at the yellow line too. So here we have several opportunities to short. I actually think right now is a good opportunity to short. Now, looking at the futures of euro, this looks like a bullish security to me. Well, we can do euro, US dollar. So, breakout equals bullish pressure is in reference to this place right there. Euro broke out on 16th of May, and again you can just simply buy this breakout, and sometimes that actually works quite well. Sometimes it doesn't, so you'll have to use your discretion, but it kind of simplifies things to have those indicators around. So here we have several buying opportunities around the green line, with a stop below the red line or possibly below the blue line, just depending on how tightly you like to play your steps. This also could work, for example, on 5-minute chart. Doesn't work as well because there will be more whipsaws, and in general the more zoomed in you are, the more whipsaws. So for example, here is a breakdown, but there was not really that much of a follow through on euro, but here is a breakout, and it was follow through on this 5-minute chart, so you would have made some money if you simply bought at the breakout. Looking at British pound, let's do GBP USD. I think it's a bullish security. Here's the breakout again on the 28th of June. Several excellent buying opportunities at the green or the blue line. Now the Japanese yen is a little less clear because here's US dollar versus Japanese yen on the daily time frame, but this is from FXCM. So notice that here we have a breakdown on the 22nd of November 2017, and now a bounce, and notice how the price came up to this blue line and was sold off and has sold off so far. But here's US dollar versus Japanese yen from Oanda, and the chart looks a little different there because notice that here yesterday we actually had and actually today as well, we had a close above this blue line. So who do I believe? Well, I guess like we could go to Japanese yen futures, and their QJY future. So here is I think it's a better chart, better representation of the yen. We can see on the 22nd of November a breakout here, and basically we should, if I was trading it, I would be buying it probably with a stop on close below this red line. So sometimes it can close right below it, sometimes it can close further below it. So I would give it more leeway and bet less money basically. Yes, sometimes you will not make as much money, but you will have a significantly higher transaction success rate. Like for example, of late I've been having a very high success rate, 74%. So Japanese yen seems to be in an uptrend. I would be buying this. Overall, dollar is in a downtrend, and this is helping gold, and I'll show gold next. But before I show gold, I wanted to show a screenshot that was sent to me by Jay, and he's one of the subscribers. Thank you, Jay. So let me blow it up, show you how Jay was using my indicators. It's kind of hard to see because he has other things here, but here is the indicator. You can see long MasterCharts trading, short MasterCharts trading. He's got EMAs here, exponential moving averages, and blanking out. Couple more indicators. I forgot the name of them because I never use them actually. But what I got from him is this: he sold yen, so shorted yen before the Fed. So your indie works beautifully. Thank you, sir. So that's thank you for saying that. But it's actually exactly how I would potentially use it too. But I would have probably shorted it a little bit lower and just rode this wave down and then maybe shorted it again. But in any case, there are quite a bit of interesting options of how to use the indicators, and if you are using them already, then of course let me know. I'll be very interested. Okay, let's look at gold next. So XAU USD. This is the way they trade on Forex. If you're not familiar, you got gold on the top and US dollar on the bottom, XAU/USD, and in this particular case from the 12th of December of 2017, the XAU has been winning and dollar has been losing this battle. So let's go to futures. I think it's again a better representation. So here is a gold futures on a daily time frame. I think it's a bullish chart. It's a little bit choppy. I thought, if you listen to my previous videos, I thought that this is gonna act as a support here at 1323. That did not happen. I thought this blue line at 1275 or so was gonna act as support. It kind of did, but then it kind of broke below it, and now we had a pretty strong rally. And what I like about this Friday's close is that it closed above this blue line, blue resistance line. So now there is I think that we could see a relatively strong move higher. By extension, dollar should drop as well. Here's my position in GDX. Excuse me. So here I said there was a possible breakout back in September of 2017. Since then, we've kind of been sliding down, down, down. Now, I went ahead and I said, okay, yeah, this sure as heck looks like a hammer candlestick here on the 12th of December. Probably should have entered immediately. I went ahead and I entered on the 13th at 21.74, so like right there. Went in my favor basically immediately, so I already sold half of my position and I'm trailing the rest. So this support resistance indicators also could be used as a basically trailing stop as well. You can see that they the prices sometimes move between the lines as well, so it's quite useful. So overall, gold I think is in a bull market, especially if dollar decides to take a collapse now, and it could easily collapse through the fresh lows, through the September lows from here. One interesting outlier is the Mexican peso. So here's the US dollar versus Mexican peso. In this case, US dollar is winning this battle, so we got a breakout above this red line. Notice how sometimes the indicator just stops right at the line. Is this a true breakout? It's possible. It feels like it could continue higher unless it gets shorted immediately, basically. And here's EWW. Here's Mexico iShares. I actually have a position in Mexico in this ETF. I entered it right there on the 17th of October at the blue line, and it's been kind of moving against me. I'm really considering closing it pretty soon, which would be unfortunate, but it's an unfortunate reality of life, and especially of trading, that you cannot win all transactions. So in any case, I think the dollar could take a dive from here. All right, let's continue to oil. Pretty straightforward. This is an uptrending instrument. You could be buying it. Actually, I sent an alert to my subscribers recently on USO, and the target almost reached, I think. Yeah, almost reached the target, but the alert was sent right there on the 8th of December, and it seems to be going in the right direction, which is a good thing. But oil, in general, I think is in an uptrend currently. Here is light crude oil futures. It's kind of difficult to trade it at retail level, honestly, so I'm not even sure it's a good idea. Here's a breakout on light crude oil on the 20th of September, and basically since you can just start buying it at the blue or the green line. So if you buy at the blue line, it's kind of like a strong breakout move. At the green line, you can get additional entry opportunities, and you can see them really kind of convenient. They just land right on the chart. Again, you can get those indicators at MasterChartsTrading.com. Recent breakout and also my position, I went ahead and I opened XLE yesterday on this breakout, so I opened it like right there. I'll mark this chart later on. But yes, it seems like it's a brand new breakout, and we could see hopefully a strong move higher for this ETF XLE. Finally, here's natural gas futures on a daily time frame, and this chart has been kind of tough for me because of the adjustments of data. I think this candlestick wasn't on there before, but in general, this looks like a bearish chart, and you can see there was just excellent shorting opportunities at the red line here, especially the last one. If you even shorted at the red line, that's a really nice move down. And I have a feeling that we may bounce a little bit, but I think we have significantly more downside here than upside. Let me look on the weekly here. NG, like that maybe. Yeah, we could see a significant move down to like maybe $2.20, maybe even lower. Maybe on $2. Anyways, if you like what you hear and hit the like button, please also consider signing up, and you will get those indicators at MasterChartsTrading.com. Thanks for watching. Please be charitable and kind to others who may not be as rich. And Merry Christmas. Thanks for watching. Bye-bye.